G'day everyone, this is Rangadad. This is not financial advice, just the way I'm looking at the market. Um, Interesting CPI last night. As I said to those in the Origin Discord, I actually had that fucking copy trade account liquidated last night. And my fault, I fucked up. Thankfully, I told people not to copy me yet. I was still figuring stuff out, but yeah, let's run through what happened there because there's a number of lessons that everyone could learn from. So, just bring up. All right. So basically, yesterday, I told myself not going to trade. That lasted a whole. What was it? A whole couple of hours. Because it looks like it's only showing. It only shows a certain distance back. Anyway, I ended up somewhere in here closing out the trades that I had running overnight, the hedge trade. And yeah, this one here, I thought, I mean, it looks like a good trade. I'll just take a little bit here. Took a little bit there, traded the opposite direction, and then just I thought that was actually going to drop and do what we said we thought it was going to do yesterday, which was actually I deleted the LARP lines for that, which is unfortunate. But when we're around here, if you look at yesterday's video, it was somewhere up in here. Actually, I think it had only just come into this region. I was looking at it, looking at liquidity and stuff like that, thinking, oh, this should come down in here. No worries. And the hypothesis was that it was actually going to come down here through the day and then move to the upside for CPI print. Unfortunately, that was incorrect. So I ended up trading this region in here. I was kind of building positions in preparation for this. I thought I'll stay up and I might just watch that CPI event and I'll trade it. I was pretty happy with the setup that I had going into this. The move up was nice. I actually had the long was hedged. So the long was the hedge. And what I mean by that is basically going into here, the long position was smaller than the short position. So I actually had it set up so I had a bigger short position. I had plenty of margin going into that as well. I think all up at that point, and it's hard to tell here, but I think I was up around 0.4 BTC in the short direction and 0.3 in the long direction. And the idea was the way we were moving up and the way the liquidity looked at that point, and I'll show you one of the things I was doing, which I shouldn't have been, was trading on my phone. Just let me bring this in. But looking at the liquidity at that point, it was taking a little bit as we went up, but these violent sort of moves down, quick moves down. And I was taking profit kind of the whole way along through the day. So overall, if I had have even just broken even on the open trades, I would have been up another probably 10% on the day. But looking at it, the way we were sort of eking up, typically if you're moving in one direction into a news event, it will normally, the first move is the false move. And it just looked to me like it was sucking people in to go long. And obviously it did, it spiked, hit some liquidity up here, and then reversed to the downside. And the unfortunate thing was, like, this is the minute chart. Should I go the 1 second? Hang on, I'll go something like a 30-second. Can't stick bybit. Sorry, go back to 1 minute. Yes, off. I'll get rid of that there. Yeah, so when I was watching this live, trading on my phone, it's nowhere near quick enough to be able to exit out of this spike area, the long. This whole thing, like this move up was good, but the velocity with which this moved up and down, that whole top to bottom wick was done in a few seconds, like 5 seconds or so. So stupidly, I thought I'd have time to actually get out on my phone, mind you. On here, on my computer, probably would have been fine, but on my phone, trying to get out of that position near the top, not great. So anyway, I missed that exit opportunity. I thought, screw it, I'll let it ride just in case this is actually a fake out to the downside, and didn't take profit on the long when it came back into here, stupidly, obviously in hindsight. And then obviously it started going in the direction of my main trade. Fantastic. You know, it's going, overall account balance is going up. I took a little bit of profit off the table there. So I took, I think that's about 20%, 25% of the position off the table. Closed the position there. Actually, no, there must have been some left still. No, I think that's where I actually closed the position. And the main reason being, I thought it was getting to a point on my phone where it might actually reverse from, because at that point it had taken a fair bit of liquidity. It took this main bit of liquidity. It was actually down in around there. And we had that wick to the downside kind of set up. So I thought, screw it, I'll close that position. What I should have done was close the long at the same time. Typically, that's what you do with a hedge. Once it goes in your favor the way you want it, you close both positions and you end up overall across both positions. This was about 3 hours past my bedtime at this point, and stupidly I thought, it looks like it's going to reverse here. I should be able to get out of the long at a better price. So I left the long open, and we had this slide, and I thought, okay, that's a good point. Again, there was key liquidations around that point. I think that was around that 60,100-ish, I think. Okay. Yeah. So I closed the short a bit at the top of that candle, basically, and I actually opened another. Oh, so there must have been more left on that short. So there was 0.1 left on that short at that point. So I'd still been riding it down a bit. but it was overbalanced towards the long side, waiting for that bounce. And I thought, this looks like a really good point for the turnaround. Didn't wait for anything that I would normally wait for. Like typically I'm waiting for the MACD to close above. Obviously it was way off, and yeah, hard to see when you're dealing on shorter time frames on your phone. But I actually opened extra longs, and in a big way, that was a stupid open. Thinking, okay, if I open more, I only have to come back up a little bit, and then that'll be it. I'll still be in profit overall for that particular hedge that I had running. And then it kept going against me, and this looks like a small candle, but that's actually a fairly big top to bottom candle. So 200 points when you're dealing at 50x leverage is a fair bit. And by that time, I'd actually gone so far long, expecting that bounce, that I didn't have much available balance to actually hedge it in the other direction when I saw it. When I had time to actually look at it and think, shit, we're actually potentially going lower here, that's all I could put on. And that was, I had to close some of the long so that I had enough to actually put a hedge on. And that got me my liquidation point down to about 58,700. Yeah, it was about 58,700. Anyway, and obviously I thought, okay, that's too tight, but it should be okay because, at that point there actually wasn't much liquidity here at that point. And as it turns out, the really strange, or the really annoying thing, this annoyed the piss out of me actually, it exited the long right here, obviously on the bottom of this candle. But if you look at the stats on this candle, look at the low. There's 58,817. My position still had margin in it at that point, and that fucking pissed me off when I saw that reverse. Because I could have at least gotten something out of it, and exited somewhere around there. But like, it was a stupid trade. It was a stupid thing. The worst thing I did was trade on my phone. Second worst thing was not actually closing both the main and the hedge at the same time. That was dumb. And basically just not protecting my liquidity, thinking that I could, on the shorter time frames on my phone, pick the bounce point, without even looking at this. Like, I don't know why I wasn't looking at my indicators properly, but typically when I'm trading through the day, sitting at the desk while I'm doing work, I've actually got a setup where I'm looking at both the 15-minute, the 5-minute, and I've got obviously the 1 minute for the actual entry and exit points. So at home on my phone when I'm tired, that's what happens. You get the market fucking shows you shouldn't have done that. So yeah, I mean, the fact that it liquidated me when it didn't actually hit my liquidation level was really annoying. But yeah, the other thing was just, I shouldn't have, like, this looks so different. And it's because it goes off what the maximum is. Obviously that liquidated a lot of people there. Nearly 90 million versus the biggest one here was 54. So it looks different, but obviously looking at it last night, when we hit that point there, I thought, oh, this is going to be enough, down to that gap anyway. And yeah, obviously it wasn't. But the really annoying thing was I picked the direction. I had good trade set up. I had at one stage it would have been up over $1,000 on the account. I actually wanted to get out of this a bit earlier. I didn't want to trade CPI last night. It was only because I just could have gotten out, but I didn't want to take the loss that I had in the hedge. And I actually missed this little pump to the downside because it was at dinner time. I wasn't going to trade with the family at the dinner table, but that little sweep was actually kind of what I was looking for to get out of my trade. So yeah, lots of lessons learnt there. As I said, still trying to figure out the best, I guess, time to trade for me through the day. Obviously, I don't want to be sitting at the computer all day, and the Australian market timing just sucks. Asia's been on a holiday itself at the moment as well. Like the volumes through Asia and stuff have just been awful. And it's been slow grind for the last couple of days in the lead up to CPI. Obviously, that's fairly typical, but yeah, in Europe for the next couple of weeks. So I'm going to try and I'll re-top up the account, and I'll actually see if it's just better if I just trade the first hour or so of the market session, US market session, just where there is decent volatility. Because typically I don't want to hedge a position. I'd rather just pick the direction right the first time, and yeah, obviously that didn't work out through that low volume area. But okay, that's enough of that. But yeah, don't trade on your phone. Don't force trades. Actually, we'll come back in here. So in terms of where the market's going next, it's left a fair bit of liquidity up here. I'd be interested to see it once it gets rid of this as a high, because it's kind of distorting everything else. There is a bit more to the downside. I think it actually looks like it wants to go back up, to be honest. The fact that we didn't follow through any further on that suggests to me we do actually want to go higher. As you can see on the longer time frame, there is quite a bit of liquidity up there. So the setup that we were looking at yesterday, I'll just have a quick look at this one. If we do go lower, the 55 level is a pretty decent target, but it's still not looking that likely at the moment. There's more stuff going on in here. Maybe a sweep of these lows and then move to the upside, but we'll get to the charts because it shows things a bit better. So yeah, we had sort of targets in around the 200, 800 EMA. Obviously, it went below them. It picked up these vector candles here. I don't think we've gone into these ones yet. What are we, 58? No, so we haven't come into these vectors yet. It could do that. As I said, it could just sweep to the downside and then move up. Interesting that we're sort of bouncing down along this sort of the same trend line as these through these wicks here. if we get sort of significant closes below that, it could be an issue. But at the moment, I'm still at least short term leaning bullish. It would be better though if we close this above the 200. So today, if we close above, what's that? About 59,500, say, which is only 300 points, $300 below. That is a lot more bullish for my mind. That a close above that would be good. The fact that we haven't come down below these wicks at all, and in fact, if we're closing above that 0.5 line, that's pretty handy as well. I think yesterday we were looking at this, so that's the 0.318 level if you do it. Sorry, 382 level if you do it the right way around. So that's still a good area for a bounce. Can we come lower into this 55, 56 level? Yes. I'd like to see it still have a couple more days to the upside. I think a better turnaround point is somewhere around the 63 to 65 level. At which point then you would probably be looking for a bit more of a pullback. But I think it's going to grind for a bit now that we've got that CPI read out of the way. I think it's probably going to grind up. Looking at the charts and stuff and where the liquidity is, it's leaning more towards a grind up to this point over the next week or two, and then probably a pullback on the Fed rate decision, which is fine because I think a pullback on that would actually be healthy. Just say the Fed cuts 25 basis. The market doesn't like it. The market wanted 0.5, so the market pulled back, and then they realize, okay, it's not that bad, and then we grind up and go to new all-time highs. That's kind of the best case scenario, and that's probably the main way we will get new all-time highs on Bitcoin. If we go 0.5 basis points, then things will probably get a bit choppier. But we'll just have to wait and see what happens when it happens. The a shorter time frame. So this was just dumb. All I had to do was look at the 5-minute time frame, and it was rejecting off all these key moving averages and Bollinger Bands and stuff like that all the way down. As soon as we got inside this Bollinger Band, and like I should have been freaking just holding it. I should have closed my long too. I was sitting there thinking, I could close my long here. I think it's going to go in the direction of the short. I'm like, no, it's still a hedge. It's still making money in the short. Just not the right headspace, not the right trading hardware for that particular trade last night. As you can see, it moved pretty quick once it got below this level too. We kind of need a recovery of the 800 and the 200 EMA to actually go bullish here though. So it's going to be a grind up. It's not going to go zooming off to new all-time highs from here. It will probably take a little while. A few weeks to the downside, there is some liquidity further down if it wants it. So I think a push up into this level would get us above the 200 daily. So a push up to there by the end of the day, or even whatever that level was, I can't remember now, but push up into that level, and then potentially during the day, a sweep back down to this level, freak some people out, and then we start to grind up. That would actually be a reasonably likely scenario, in my opinion. Just go to the 15-minute. Yeah. Interestingly, it didn't have, just because of the volume in this area in the lead up to the CPI. And this was always going to fucking do this. God, I wish I was sitting at my computer through that. So that's the first thing. I'm not trading on my phone. If I have a hedge open and I move away from a computer, I'm just going to let the hedge run, because I can, and I did it before multiple times in the last week, I can actually claw back a hedge that goes in the wrong direction. That's actually fairly easy to do when you're doing 50x and looking at shorter time frames. And that's what I kind of thought I was doing here, but that was just stupid. So even if while I'm sleeping or whatever, like if I've got a hedge that's like if I'm hedged to the long side, main trade is downside, and it actually goes to the upside, I can actually get out of that and work my way out of that through a session. That's not a big deal. That's why I like the hedge system. It's just I was dealing basically with way too much of my account. So anyway, enough of that. So yeah, looks obviously fairly oversold here. All the indicators are oversold at this stage. We do have dropping volatility through this whole range though. So probably I don't think we're going to get any decent move until volatility resets, at least on the 15-minute. On the 5-minute, it's still just resetting now. So it's looking promising for an upside move. Your stochastic momentum's a little bit high at the moment, so potentially a bit of a reset on that. Another drag down into this level here, and then a move away. The cyclic RSI is actually, that's actually suggesting bearish divergence. So yeah, probably a bit of a pullback in the short term. CCI's geared to the upside though, so it'll be interesting. I don't expect it to be a massive drop. Could be wrong, but yeah, I think pullback and then a bit of buying demand into the close of the day. So got 3 hours left on the day. By the way, that move there, top to bottom, hour and 40 minutes, it moved over $3,000 on Bitcoin, 5% move to the downside. Fucking hell. What an idiot. If I just had been on this and just like literally just watching the 5-minute chart, would have held that. Probably would have got out somewhere up here, but that still would have taken that account well over 100% on the week. In fact, it would have nearly doubled that account just in that one move. Anyway, live and learn. That's kind of the lesson I needed to show me when and where and how I need to trade this to be consistent. So it's kind of my first real foray back into higher frequency trading since basically the 2021 bull run, to be honest. So let's have a quick look at the other markets. So CME's pretty similar. That's not a bad place to bounce really off that top of that candle there. Another interesting level. Oh, just going back to here. The setup that we were looking at the other day, which was basically one leg, two legs, that was slightly longer, and then three legs would probably still be from here, to be honest, up into that 65K region. That is still very much in play here. We have not closed below these wicks. If we do actually see a close below these, that'll be a bit more concerning. Even if we see a rejection off this, I would suggest it's going to chop more sideways and potentially head down, but we'll have to wait and see. The fact that it's swept a lot of the liquidity, I'll just bring that back up, sorry. The fact that everyone went long here, like there was a huge amount of longs there. That's weird. Symbol's lower than the actual bybit pair, Binance pair. Anyway, given everyone went long here and it took that liquidity quite quickly, that suggests to me that we probably are headed more towards the upside. I think it wants to clear this region of as much liquidity as possible before it actually takes that next leg up. So keep that in mind. Yeah, I think worst case scenario is this turns into a massive M formation. So that's your M, come back up somewhere into the 58 region, and then if it turns from there and breaks whatever low it makes here, that's when you know, okay, we're going quite a bit lower. Could we just slide from here? Yes, but it is not very likely at all. So yeah, I think overall the analysis yesterday was reasonable in terms of bias to the downside, just didn't trade it properly. And I think the other thing too with this, it's not actually that was the other thing here, which was an interesting fake out. So that there, the only reason I was even hedging long was because we were pushing these sort of levels, and that looked like a pretty decent W pattern. It actually got back into that level and started pushing away. So that's why I was like, through the majority of the day, my long hedge was only about 25% of my short. And then I actually increased it somewhere in around here just because I could see it heading that way. But yeah, anyway, generally to the upside. I'm back on that again, aren't I? So let's go into Qs. Interesting day on the Qs. Where's my, there it is. So still above this level here. Just go, what was it on? 15. Yeah, surprisingly, we didn't really come down at all from that point. It just went straight through last night. A little bit surprised at that, but markets definitely liked that CPI print. A little bit sideways, to be honest. A little bit surprised at that. It is bumping up against the 800 EMA, so a little bit of a resistance point. Oh, the other main resistance point was actually on the S&P 500, and it looks like it's trying to break that. As we said yesterday, there was a call wall on the options market at about the 5444 mark, somewhere around there, which was a really good level for this to actually reject off. And I thought the market might do that, but it obviously didn't. It, for the most part, liked the CPI print. And it was a fake out to the downside. The interesting thing is Bitcoin kept going to the downside, whereas the general market didn't. That surprised me a little bit. So, the market is irrational. The market can stay irrational longer than you can stay solvent, as I proved last night. Do we keep grinding up, or is this just something to suck everyone in before it actually moves lower tomorrow? I think it probably moves lower tomorrow, to be honest. Retail sales, it'll probably come in. If it comes in lower, that'll be the excuse to come down and fill some of these gaps. Yeah, I think that's probably what will do it. Yeah, I think it's going to be a fair level of resistance at this point. Lots of volume in here. I'd throw a volume profile on it, but you're obviously going to have a fair bit of volume through there. Equal weight, pretty similar. Just go daily now. Bit of an indecision day on equal weight. Equal weight Qs, I should move up from there. Equal weight Qs, again, nothing really to write home about. It's not a super buy-in from the market. Like, it's not exactly rushing to pump the market at the moment. So again, I think it's probably a little bit of downside on the S&P 500, which could affect Bitcoin. So it is something to keep in the back of your mind and something to watch, that if the general market does start dumping, Bitcoin will probably go with it, and that'll put the 55K into the discussion. Interesting gap fill on XLI at the top of the Gaussian channel. Stochastic momentum still to the upside, but it's looking pretty overbought at this stage. XLY, XLP has dropped a little, so it's suggesting a little bit of weakness to come in. Regional banking, a little bit, well, it's sideways. You can't really touch off that. Home construction, down a bit. Coming off pretty decent low in stochastic momentum, though, so we are in the bearish control zone for a lot of these, so keep that in mind. It doesn't have to come out of this zone yet. So potentially another leg down on some of these. DJR Gold has had a decent bounce. That's good. VIX is still coming down. That's not a bad thing either for the bulls. And the skew. So skew's actually bounced again. Interesting. Looks like the market's bullish again. Based on that, anyway. DAX is looking okay. It's sort of reclaimed a fairly key level in here. Bit of an indecision candle though, so maybe another little bit up, close this gap before it has a retrace. UK 100, geez, that's probably the strongest looking index out of all of them. Interesting level for it to reverse from though, somewhere around here with the vector candle there. I had a lot of volume over the last week or so. Japanese market bumping up against the 200 daily. Treasury's still going up. High yield junk looks like it wants to break out now. That's interesting. So that's kind of suggesting that the market's not unhappy with where everything's going. Yield curve's still inverted, but looks like it wants to try to the downside soon. Copper still in our potential buying opportunity box. Is down a little bit, but nothing, no major breaks. Gold had a decent volume day yesterday. It's looks like it wants to come down, but the fact that it's held that level, sort of 50% of that candle there, suggesting it might just be a temporary pullback. Silver, same sort of deal. WTI crude, so it's come back and hit that 50 on this overall move. Let's just see where it's likely to stop. Okay, could bounce from here. Typically oil will come back further though. Commodities markets like oil seem to move more towards the 618 for their bounces, so keep an eye out for that. If we bounce from here, that would be quite bullish, so that would probably push us through the 85 mark. Dixie still struggling. I still suspect it's going to break this level. But a lot of like the rate decrease has actually pretty well been priced in now. The fact that the markets are kind of sideways on the news of it, on the news of the CPI, sorry, suggests that they were pretty happy with what they've priced in so far. So that'll be interesting to see how that goes. AU dollar, that'd be right. I'm going to Europe in a couple of days. Euro USD, very flat. Oh, okay, that's today. So still pushing up. Brazilians just pulled back slightly. Okay, Japanese yen. Still probably got a little bit more to come. So if this pulls back a little bit more and euro has a pullback day, then and euro could pull back into this area, 109, then US dollar will push up a little bit more. But I'd expect it to sort of stay in this range for a little bit. Do a bit of coiling before making a move in either direction. Percentage of stocks above 50-day moving average is, so this is delayed, hey. I should have noticed that. So that's today US time, yesterday my time. So yesterday when I was looking at it, I thought that had pulled back where the market had actually gone up. But that's the one I should have been looking at. Mag 7, flat. It's only just cleared that 50 EMA though. You kind of want it to, excuse me, you kind of want it to bounce. But it may actually, like, this isn't a bad spot on the markets for a pullback. Middle of the Gaussian channel there. It's only just confirmed above the 50 for the first time. Typically, a pullback from that is not unheard of. As you can see, it likes to go past moving averages and then pull back from them. It just tends not to go too far past if it's going to, and doesn't stay there for too long if it's going to reject off them. SMCI. So, yeah. Generally, I mean, that was flat, just waiting for CPI. The Aussie market, that's a pretty good level for the Aussie market, though. Retested the 20 daily, closed above that key level. Vector candles to the upside. It actually looks like it wants to go further. Which, if gold breaks out, if materials sort of break out, you would expect this to run. Even banking, if banking goes well. So let's see what ETH did. So ETH only came back 1%. Bitcoin, like, when you look at that, in fact, ETH only came back 1%, 1.1. Most cryptos, like the bigger guys, haven't actually corrected that much, but Bitcoin's come back 5 and a bit. Well, sorry, 2.61% open to close, but like 5% on the day. Yeah, 5.5% on the day. That again suggests to me that it's a bit of a liquidity run. They took mine, so yeah, I'm actually surprised that that's the first time I looked at ETH and the others this morning. So, what was that top to bottom? Oh, it's 5.25 as well, I guess, but it's bouncing pretty well from that bottom of that candle. It probably had a similar looking drop. Yeah, okay. Yeah, interesting. It's had more of a move up though as well. Obviously that actually looks like a bear flag there. That's probably the most ominous sign I've seen for crypto, is that actual bear flag. Whereas, yeah, I mean, bear flags don't have to go up at an angle, but typically you wouldn't see it actually come down at an angle if it's going to drop very far. So I think something like this, if we break out of that in either direction, that's going to confirm your overall bias for the next couple of days, I would think. If we break below this, it would be a fairly substantial break. Probably, yeah, back down in the 57.5. But closures below, what's that wick? I'd say closures on the, let's say a 1 hour close below 57.5. And that would kind of confirm that we're going quite a bit lower. All right. But if we do close below that daily 200, it's leaning bearish already, even without that 57.5 level. All right, that'll do for today. I've got to do some work. At least liquidating that account means I can just focus on work and getting ready for the trip. So don't have the temptation there to trade it. All right. I'll talk to you guys tomorrow.